Right. So we've already have recorded one video wherein I have discussed with you the MCQs and the MTP2 for the Jan 25, right? So now let's discuss the question and answers and the MTP2 of the Jan 25, right? So when you look into these question and answers over here, right, you've studied each particular chapter, sequence wise and studied the questions for that particular chapter. But now random basis, like, as a jackpot, when randomly from different chapters, different concepts, when questions are coming in front of you, right, whether the right points in the answers, whether the right format of the answer, is it clicking to you? That's, one of the best way to check that is to solve these particular MTP and the previous exam questions and so. Okay, right. So let's begin with the question number one, which is regarding the right, ABC Private 1A, ABC Private Limited is the manufacturing company facing significant financial difficulty, or they start only with financial difficulties, so should be going concern due to downfall in market and increase in cost of production. Ram, the auditor of ABC, has identified the following condition. Company has defaulted on a major loan repayment, current liabilities exceed current assets, sales revenue declined by 30%. Management has not yet performed an assessment of the company's ability to continue as a going concern, but they provide assurance for implementing corrective measures, including cost cutting initiatives, discussions with creditors for restructuring the loan. Okay, just assume we have not read any of this. Which additional audit procedure need to be performed by CA Ram in accordance with SA 570 when such events or conditions are identified? Right? So, additional audit procedures when the events or conditions have been identified. First, request the management to do the assessment. If they have not yet done the assessment, request the management to provide the written representation. Also ask the management what is their plan for the future. Based on the plan, have they prepared a forecast? You check the data and assumption and additional facts or information beyond the period of the management's assessment. Okay, right. So additional audit procedures when events or conditions have been identified that cast a significant doubt, right? So 5-star question. So if management has not yet performed the assessment, request the management to do the assessment, request management to give the written representation, and you're also going to ask the management for their future plan. Forecast. In the forecast, you are going to check for the data and the assumptions, and you're also going to consider the additional facts or information beyond the period of the management's assessment. Wonderful. Question number 1B. See, she is appointed as an auditor of AIR for financial year 24. During the audit, he observed that the company's books of account reflect a significant number of trade receivable payable on the balance sheet date. To verify the accuracy of the trade receivable, Rishi decided to send the confirmation request. However, the management refused to permit him to send these confirmation requests to the selected party. How should the auditor proceed in the given situation? SA 505, external confirmation. Management's refusal to allow the auditor to send a confirmation request. What you do, ask the reasons to the management. Check the validity and the reasonableness of the reasons given by the management. Consider the implications of the management's refusal on the auditor's assessment of RMM, including the risk of fraud and the nature, timing, and extent of the other audit procedures. Right? Then perform alternative audit procedures to obtain the evidence. Still, you are unable to obtain the evidence. Limitation on scope, communicate to TCWG, modify opinion as per 705. Right, so again, a 5-star question over there. Favorite question of ICAI: management's refusal to allow the auditor to send a confirmation request. One, you ask the reasons to the management. You also check for the validity and the reasonableness. Then implications of management's refusal on RMM, fraud, and the other audit procedure. Then alternative audit procedures to obtain the evidence. However, still, if you are unable to obtain the relevant reliable evidence, one, communicate to TCWG and modify opinion as per SA 705. Okay. Tanuj, the auditor of Kiran Limited, completed the audit work and issued the audit report on 18th August for 24. During the final assembly of the audit file, he discarded some supporting schedule as same were outdated and the corrected the cross-referencing errors of the working paper. No new audit conclusions were drawn, and the final audit file was assembled on 10th October. So 18th August, 18th September, and 18th October, right? So not more than 60 days. On the basis of the essay, comment on the action taken by CA Tanaj. So again, assembly of the final audit file has to be completed on a timely basis, not more than 60 days. It is an administrative process, cannot perform new procedure, cannot reach the new conclusion. Changes can be made which are administrative. Then it has to be retained. Right. So now your the report was issued on 18th August, and he discarded some supporting schedules and did certain cross-referencing. And the assembly was completed on 10th October, which is under the prescribed time limit of the 60 days. There were no new audit conclusions drawn. Therefore, Tanuj can make the set changes to the documentation during the final assembly process. Okay. Right, coming to question number 2A. Deepa Limited initially requested an audit engagement for 24. However, midway through the audit process, the management claims that they are unable to provide the complete documentation for a significant portion of the debtor. As a result, the management asked the auditor to change the audit engagement to a review engagement, arguing that it would prevent the issuance of a qualified report. The auditor is now facing a challenge in determining whether this change is justified or not. Right? So SA 210, acceptance of a change in terms of engagement after acceptance of the engagement. Right? So you need to check whether there is an RJ, a reasonable justification to do so. Right, so it says the change in the terms of engagement may be required due to change in circumstances, any misunderstanding as to the nature of the audit as originally restricted, or a restriction on the scope, whether imposed by management or circumstances. Right, so either there is a change in circumstances, or there is a misunderstanding, or there is a restriction on scope imposed by management or circumstances. So that is CMR. Okay. Auditor considers the justification given for the request, particularly the implication of a restriction on the scope, a change in the circumstances that affect the entity requirement, or a misunderstanding considering the nature of the service originally requested. Right. So it says circumstances and misunderstanding. So out of the CMR, the C and the M, it may be considered to be a reasonable basis for requesting a change in the terms of engagement. However, a change may not be considered reasonable if it appears that the change relates to information that is incomplete, incorrect, or otherwise unsatisfactory. An audit example where the auditor is unable to obtain evidence regarding debtor and the entity asks the audit management to change to a review engagement to avoid a qualified or a disclaimer, right? So R is not a reasonable basis, C and M is a reasonable basis. Hence, Deepa Limited requests for the audit engagement to be changed to a review engagement to avoid a qualified or disclaimer is not a reasonable. Right? So no reasonable justification to do so. Okay. Question number 2B. Karo shall apply to every company, including a foreign company. However, it specifically exempts certain classes of company. State the classes of companies which are specifically exempt, right? So we say it is possible that for few companies, Karo reporting may not be applicable. Private limited companies subject to certain condition, 1 CR, 1 CR, and 10 CR. One person company, small company, Section 8 company, insurance company, and the banking company. Right? So that is our answer regarding the applicability of the Karo. Okay, right. Question number 2C. RST, a mid-sized trading company, recently faced challenges in securing a bank loan due to doubts about the reliability of financial statements. Management realized the importance of having audited accounts to build confidence, assurance to among the lenders and the stakeholders, elucidate the benefit and the need of an audit. Right. So chapter number 1, the benefits of audit. Right. So we say that audit is a gift to the shareholders and the investors, right? So it is beneficial to the government, to the insurance company, financial institution, bankers, also to the trade union. Also, it acts as a moral check on the employees, right? So that's the benefit of the audit. It gives the high quality information. Then for the shareholders, the directors, also a moral check on employees. Government for determining the tax liabilities. Lenders, bankers, right? So that is the benefits of an audit. Question number 3A. During the audit of Smile Bank, oh my God, CA Sweeting focused on the understanding of the risk management process of the bank. So, out of the steps involved in conducting the bank audit, the risk management process, which is similar to the 5 components of internal control, that is CRISM. Right? How should CA Sweetie evaluate the adequacy of the bank's risk management control? Right? So one, it says the control and oversight of the TCWG. So that is C, that is the control environment. Then after that, the identification, measurement, and the monitoring of the risk. That is I. Then that is R. Then reliable information system, control activities, and the monitoring. Right. So similar to the 5 components of internal control system, which is the CRISM. Okay. Right, risk management system of the bank. Now, question number 3B. Aman Cooperative Society appointed FMB Associates as an auditor for 23-24. During the audit, the auditor noticed the following detail: number of shares, net profit before compulsory transfer to reserve fund, and net profit after compulsory transfer to reserve fund. There, a member of the society holds 200 shares amounting to 2,000 from the previous year. What is the maximum shareholding? 20% of the total number of shares, or shares of the value of rupees 1,000, whichever is less. Upon verifying the society borrowing, the auditor found that the cooperative society had accepted a loan from Shivam, a non-member. The auditor did not find any restrictions in this regard in the society bylaws. Comment on the above transactions of the society with reference to the Cooperative Society Act, right? So cooperative society audit of the different types of the entity. Right. So now here the question is regarding restriction on shareholding and restriction on borrowing. Right. So what does it say? 20% of the total number of shares, or shares of the value of rupees 1,000. And borrowing, what does it say? A cooperative society can borrow, shall accept loans and deposits from persons who are not the members, subject to the limits and the bylaws of the society in the given case, right? So he is allowed to hold maximum only 100 shares. And further, Aman Cooperative Society had accepted a loan from Shivam, a non-member. There are no restrictions regarding the acceptance of the loan. Therefore, the loan received from Shivam is permissible. Okay. In establishing the overall audit strategy, the auditor shall, among other considerations, ascertain the nature, timing, and extent of the resources necessary to perform the engagement. Explain those considerations in detail. Right? So this is basically audit strategy is the assistance to the auditor. So benefits of the overall audit strategy. Right? So it talks about the benefits of the overall audit strategy, right, in establishing, shall, among other things, and explain those consideration in detail, right? So what are the factors to be considered? Right, so nature, timing, and extent of resources is given in the benefit, but here they are saying explain those considerations, right? So we have to talk about the factors, that is the S there, right? The characteristics of the engagement that define its scope, then the reporting objectives of the engagement, that is R, right? Then the results of the preliminary engagement activities, that is A, nature, timing, and extent of resources, and it says the professional judgment, which areas are significant in directing the engagement efforts, right? So that is why we call it as the S rare. Okay, question number 4A. During the audit of HSTCA Mukund, the auditor observed significant volume of the unsold electronic parts as inventory that had remained stagnant for more than 2 years. He noticed that the company was facing difficulty selling these items due to the change in the market. Additionally, some were damaged and others were discontinued. CA Mukund also ensured that the inventory was accurately valued to ensure financial reporting. You are required to outline the detailed audit procedure that are generally undertaken when auditing such inventory, which at the time of observance of physical counting were noticed as damaged or obsolete, right? So that's again an upcoming question for your exam. Right? So one, what does it say? For the obsolete, damaged, slow moving, non-moving item, yes, auditor has to carefully examine the valuation because they have to be recorded at cost or NRV, whichever is lower. Right? So now for checking the cost NRV, one, you need to compare the recorded cost with the replacement cost. Right? Then recorded cost is less than the current market prices. Right? So 2 points regarding the recorded cost. Right? Recorded cost. Then you also calculate the inventory turnover ratio. Then also test the overhead allocation rate. So that means these are the two analytical procedure: inventory turnover ratio and the overhead allocation rate. And then after that, cost or NRV, whichever is lower. Right? So that's again an important upcoming question for your exams. Okay. Right. Next one, question number 4B. The engagement partner of a firm of auditors is explaining to his audit team undergoing practical training the interrelationship between audit strategy and audit plan. Right. So we say they are closely interrelated. Change in one will result into a change in other. However, plan is more detailed than the strategy. Strategy comes before, which is later on followed by a plan. Right? So audit strategy gives the, what you say, gives the guides the development of the overall audit plan. Right? So audit strategy gives you the STD, the scope, timing, and direction of the audit. Right? Then it says audit plan is more detailed than the audit strategy. Once the plan is a strategy is established, then the auditor develops the audit plan. And what does it say? They are not necessarily discrete or sequential process, but are closely interrelated, as change in one may result into a change in the other. Okay. Right. Next one, question number 4C. Callan Retail is preparing its financial statements and the auditor are tasked with determining materiality. The company has used revenue as a benchmark as a key indicator, has recently opened new stores and closed underperforming ones, which could significantly affect revenue and profitability. Forget all this. As per the given case, what are the factors the auditor should consider when selecting the most appropriate benchmark for materiality? So that is Venus. Right? The volatility of the benchmark, elements of the financial information, nature of the entity, needs of the users, and the structure of the entity. Right? The factors to be considered in the identification of an appropriate benchmark. Okay. Right? Question number 5A. AR and Associates have been appointed as statutory auditor of Future Limited, a company engaged in manufacture of hardware products. They are analyzing the monthly trend for other expenses like rent, power, fuel, repairs, etc., and also verifying attributes for such expenses. Forget it. List down the attributes while verifying such expenses. Right? So, what are the attributes which are to be checked while verifying the other expenses? Right. So, what are the attributes to be kept in mind? One, whether the expenditure is related to the current period under audit. So, OCACC, the cutoff, is it recorded in the correct accounting period? Is it classified as revenue and not as capital expenditure? So, that is your classification. Then, whether the expenditure has a valid supporting document like travel tickets, insurance policy, third party invoice. Then, again, whether it is classified under the correct expense head. So, again, OCACC, the classification. Whether expenditure was authorized as per the delegation of matrix, and whether the expenditure relates to the business and it is not a personal expenditure. So, again, O, the occurrence. Right? So one, it talks about that whether it relates to the current period, then whether it is a revenue expenditure, then the supporting documents, then whether it is classified under the correct account head, then whether it is properly authorized, and whether it is related to the business and it is not a personal expenditure. Right? So again, a 5-star important question over there. Okay. Question number 5B. Kavita, auditor of Healthify, while assessing the potential RMM related to litigations of Healthify, identified a possible legal claim that could affect the financial statement. She sent a general inquiry letter to the company legal counsel, Mohit and Company, seeking clarification. However, Mohit and Company informed her that professional rules prohibit them from responding to the general inquiry. Right, CA Kavita, what would be the other option available to obtain the necessary information for the audit. Right. So again, a question from 501, audit evidence specific consideration for the selected item. And here it is the second selected item, the completeness of the litigations and claim. Right. So one, it says you can review the legal expenses account. If not, send a letter of inquiry prepared by the management. If not, you have a direct communication with the lawyer, or you send a specific letter of inquiry, not a general letter of inquiry. And if not, you can finally meet the counsel. Right. So in this specific letter of inquiry, you are going to ask that Mohit and company the list of litigation claims, whether where available the management's assessment of the outcome and the costs involved, and also a request that the legal counsel confirm the reasonableness of the management's assessment, provide the auditor with further information if the list is considered by the external legal counsel to be incomplete or incorrect, right? So to provide the further information. Right, so list, then management's assessment of the outcome and any further information which is there with the legal counsel. Right, so that is again an important question. Right, so yeah, possibilities for these questions to be coming in your exam. Next one, familiarity threat are self-evident and occur when auditors form relationships with the client where they end up being too sympathetic to the client's interest expressed. Right? So too sympathetic to the client's interest. When would you be too sympathetic? When close relative of the audit team is working in a senior position in the client company. That means you are working in PwC and you're doing audit of Infosys, and your close relative of the audit team is working in your senior position. So say some finance controller in Infosys. Then earlier a partner of the firm now has become a director, senior employee of the client. Right. So here the flow is from the auditor to the client. Right. So close relative of the audit team is a working in a senior position. A former partner of the firm is the senior employee of the client. So senior position in client company, senior employee. Or there is a long association between a specific auditor and their client, right? So that is why rotation of company auditor has come, and acceptance of the gifts or hospitality from the client, right? From the client company director or employees. Right? So that's what I told you. That is why the provisions of the company law of rotation of auditor has come into picture. Okay. Question number 6A. When more persuasive evidence is needed regarding the effectiveness of control, it may be appropriate to increase the extent of TOC as well as the degree of reliance on the control. Discuss the matters the auditor may consider in determining the extent of TOC. That means the sample size for TOC. Right, sample size for TOC depends upon the flare. It depends upon the frequency of the performance of the control, the length of time, then the evidence which is obtained from testing the other control, then the expected rate of the deviation, and the relevance and reliability of the evidence. Right, so factors affecting the extent of the TOC. Okay, question number 6B. AST Limited business has grown from one state of India to various countries of the world. Since the business has increased manifold, the management decided to appoint joint auditors for conducting the audit. They appointed 3 firms. Forget it. What? Yes, for which audit work, the joint auditors will be JAS, jointly and severally responsible. So again, a 5-star question. What are the areas where the joint auditors are just jointly and severally responsible? One, for work which is not divided. Then deciding upon the nature, timing, and extent of the audit procedures for the common audit areas. Then matter relating to all brought to their attention by any one of the joint auditors. Whether financial statements comply with the requirement of the statute, whether presentation and disclosure of financial statements is as per AFRS, whether audit report complies with the requirement of the statute and also the pronouncements of the ICAI, and obtaining the information explanation from the management unless they've agreed on a specific pattern of the distribution of the responsibility. Right, so these are the areas where the joint auditors are JAS, jointly and severally responsible. Right, jointly and severally responsible. Okay, question number 6C, the option 1. Management of PQ changed during the period under audit. Govind, an auditor at the time of receiving representations on management's responsibility, was in a dilemma regarding the date and period covered by the representation. New management was of the view that they can give representation from the date they took over and not for the prior period where old management were managing the affairs of the company. Guide the auditor and the management in this respect. Right, so date of the representation as near as practicable, but not after the date of the audit report. It should, what period it should be for? The period covered in the auditor's opinion. And what if there is any change in the management? It says if there is a change in the management, it does not diminish the responsibility of the current management to give the representation for the whole of the period. Right? It does not diminish the responsibility of the current management. They still have to give the representation for the whole of the period. And KOC plays an important role in developing an overall audit. In fact, without adequate KOC, a proper audit is not possible. As per 315, auditor will obtain an understanding of the industry, regulatory, and other external factors, including EFRF, substantiate with the help of example. Right? So understanding the entity and its environment, you have to understand the industry, right? You have to understand the industry. Then after that, the regulatory, right? The regulatory and also the other external factors, right? Also have to understand the other external factors. Right, so industry, you have to understand the market, competition, seasonal activity, then giving rise to a specific RMM. Right, also in the industry practices, regulatory framework, legislation, regulation, government policy. So that is industry AFRF. Regulatory environment, it says the AFRF and the legal political environment and other factors like economic condition, interest rate, financing, inflation, etc. Right, so understanding the entity and its environment, in that the sub point regarding the industry, the regulatory, and the other external factors, right? And the other external factors. Right, so we could find a lot of interesting and important questions in this MTP2 of the Jan 25 exams, right? So if other MTPs, you're seeing them 2 times, this MTP, you should see it at least 3 times. A little extra for this MCQ would do you more benefit. Okay.